Hello everybody, this is Lara with your end of the week update for gold for the trading week ending Friday 22nd of May. We should always assume that the trend remains the same until proven otherwise, so let's assume the upward trend remains and the target remains at 1980. This will only be valid though while price remains above 1693.39. A break below that point would switch the analysis to more bearish. If that happens, I'll expect downward movement to continue at least to 1362 and possibly a lot lower. Elliott Wave analysis first, classic analysis last. Looking at the monthly chart, it looks like the bear market may not be over at this major low in December 2015 because this is an Elliott Wave corrective structure, and Elliott Wave corrective structures should look like three-wave structures like this does. It looks like a three-wave structure. When you look at the monthly chart, the bear market down to here looks more like a five-wave structure. A five-wave structure cannot be the completion of a correction. It can only be wave A of a correction. And so this may be A, B may be nearing completion, and then C may continue lower to new lows beyond the end of A. So that when you look at the whole bear market on the monthly chart, it has a really obvious three-wave look to it. The simplest Elliott Wave pattern is 5 steps forward, followed by 3 steps back, and this wave count expects that gold is still within a huge 3-step back pattern, subdividing as a zigzag, labelled supercycle A, complete down here, supercycle B still to complete, and then supercycle C to unfold and move beyond the end of A to avoid a truncation. When I have confidence that B is over and I know where it ends and C begins, then I can apply a Fibonacci ratio between A and C to calculate a target for C for you. I cannot do that yet because I don't know where it begins. Let's take a look now at this possible structure of supercycle B, and B waves can subdivide as any one of more than 23 possible Elliott wave structures. They are the most difficult structures to analyse and trade, and this one for the last few years has been absolutely no exception. Supercycle wave B may be continuing as a double zigzag. Here's the first zigzag in the double, it's complete and it's labelled cycle wave W. The double is joined by a 3 in the opposite direction labelled X, and here's the second zigzag in the double continuing higher, subdividing ABC, which subdivides 5, 3, 5. We're looking now for the end of C. Draw a channel around this zigzag for cycle Y, draw it from the start of A to the end of B, place a parallel copy on the end of A. The upper edges are round about where price is finding resistance, and if price does turn on the downwards when it does move lower, I would expect to look out for some support at the lower edge of this channel. Within this structure, I'm labelling cycle wave X as a double combination. If you learn only one thing from me regarding Elliott Wave, it would be this. Within multiples, W, Y, and if there is one, Z, may only be labelled with ABC, or in the case of triangles, ABCDE. You cannot label multiples within multiples of W, Y, and Z, because to do so would violate the Elliott Wave rule, which states the maximum number of corrective structures within a multiple is 3. That count refers to W, Y, and if there is one, Z, 1, 2, 3. That count does not refer to the X waves joining structures within a multiple, and they can be any corrective structure, including a multiple, and the rule is still met. And so in this case, I'm labelling cycle X a double combination, W, X, Y. I've seen a lot of Elliott Wave work which labels subwaves W, Y, and Z as themselves multiples, with W, X, Y, X, Z within W and within Y and within Z. To do so increases the number of corrective structures within the multiple beyond 3 and violates the Elliott Wave rule. So this is the lesson. If you see Elliott Wave work with W, Y, and Z itself labelled W, X, Y, X, Z, it does not understand the Elliott wave rule, so it's breaking an Elliott wave rule, and its probability or usefulness is probably quite low. Okay, let's move on to looking to see if the C wave within the zigzag for wave Y of supercycle B is nearing completion. Let's take a look at this at a lower time frame. Now we'll look at the daily chart with the end of primary A here is this point up here. Here's primary wave B, and now we're looking at the structure of primary wave C. C waves within zigzags should subdivide as 5 wave structures. So at intermediate degree, I'm labelling primary C 1, 2, 3, 4, 5, and I'm looking for 5 to continue. 1, 2, 3, 4, 5 waves at minor degree will complete the 5th wave at intermediate degree, will complete primary wave C, would complete cycle wave Y, and so would complete supercycle wave B. Elliott wave is fractal. The target for primary C is for it to reach equality in length with primary A in 1980. That is the most common Fibonacci ratio between waves A and C within a zigzag, so that target, if this wave count is correct, should have a reasonable probability. The triangle for intermediate wave 4 ends here. It's a regular contracting triangle, and this is where the final 5th wave intermediate 5 may have begun, with minor 1 and minor 2 a little zigzag moving a bit lower, maybe finding support at the upper edge of the extended triangle trend lines from intermediate 4. Minor wave 2 may not move beyond the start of 1 below the short-term invalidation point. Extend the triangle trend lines out, and the point in time at which they cross, which may not be next week, it may be the week after, one of the days within that week, we may see a trend change on that day. It may be to downward, upward, or sideways. Sideways is also a direction, and it may not be a lasting trend change, but these often are substantial trend changes seen at that point in time, so we'll keep a lookout for that. At the hourly chart level, here's the high of minor wave 1. Minor wave 2 is seen as a zigzag, subdividing 5, 3, 5, labelled ABC. This may be where 2 ends and 3 begins. If 2 continues any lower, and it may, as a double zigzag, it can't move beyond the start of 1. Draw a channel around minor wave 2 using Elliott's technique for a correction from the start of A to the end of B. Place a copy on the end of A. While price remains within this channel, it is entirely possible minor 2 could continue lower. A breach of the upper edge of this channel would be a bullish signal, and then we could have a little more confidence in this wave count, at least for the short term. At the hourly chart level, if we go back, I'm just going to go back to the daily chart for you. If we go back to the daily chart and we move the degree of labelling just within this movement here up 1 degree, and instead of just wave 1 within wave 5, it's possible that wave 5 could have been over there, then it's possible that we could have seen a supercycle degree trend change up here. This wave count requires a new low below the confidence point before we can have any confidence in it. This base channel is the same as the channel drawn on the last hourly chart, and now instead of A, B, C, we're looking at a couple of overlapping first and second waves, minor 1 and 2, and within the start of minor 3, minute 1, minute 2 may end at the upper edge of the base channel, and it may not move beyond the start of 1. When it's complete, this wave count expects the third wave at 2 degrees to unfold lower. That means an increase in downward momentum down toward the short-term target for minor 3. At the weekly chart level, if we look at the bear market for gold as possibly being over here, even though it looks like a 5-wave impulse, it will subdivide as a multiple zigzag, and so this is possible. Let's consider all possibilities. What if gold is in a sustainable bull market on to new all-time highs? There is a big problem in this wave count in terms of Elliott wave. No matter how I try and relabel this and what alternates I consider, I am unable to resolve major Elliott wave problems with this, which is one reason why it is an alternate, or the biggest reason why it's always been presented as an alternate wave count. The problem originally was trying to see a first wave up of a new bullish trend from this low to this high is a 5-wave structure. This looks like a 3 and subdivides very well as a 3. It's very difficult to see it as a 5. That seems forced. And so I've moved the label for the first upward wave off lows to here. And I'm seeing this movement here as part of the correction that follows it. And so I've labelled this wave 1 of a new bullish trend, wave 2, wave 3, wave 4 unfolding. The problem is in here. If we have this structure for cycle wave 2 beginning here, it now unfolds or fits in terms of subdivisions as a double flat correction. A second wave correction can subdivide as any Elliott wave corrective structure except a triangle. Triangles do not occur in second wave positions. They will only occur in B, fourth waves, and sometimes within combinations. That's quite rare. And so this structure here for cycle 2 could be a double flat. The first flat in the double may be complete here. It's labelled primary W. The double is joined by a 3 in the opposite direction labelled X. And the second flat in the double complete here labelled primary wave Y. The problem is within primary wave W, this movement here. On my first weekly chart for my bearish Elliott wave count, I'm seeing a triangle in this position here. Remember I said second wave corrections cannot subdivide as triangles with their sole corrective structure. And so I can't label a triangle here for this little second wave. I have to ignore what looks like a very obvious triangle, particularly at lower time frames, and that's a problem for this Elliott wave count. So it's a small detail way back in 2016 which makes the difference between the two Elliott wave counts: bearish main count, bullish alternate count. But let's, as always, consider all possibilities. What if gold is in a bull market? We could have had a first wave, a second wave, a third wave, and we're now looking for a fourth wave to complete. It would be ridiculous to see the fourth wave over here comparison to its second wave here. The proportion would be just, even for gold, too disproportionate for that to be considered. And so for this count, I expect cycle 4 is continuing as an expanded flat correction. They're quite common Elliott wave structures. They're labelled A, B, C, and within an expanded flat, B moves beyond the start of A. It's a 1.05 length or longer in relation to A, and then C moves reasonably beyond the end of A. Let's take a look at this at the daily chart level, where the third wave may have ended here, this point here, and here's the fourth wave in more detail, A, B, C. Now B has a pretty good fit, A, B, C, making up a zigzag for primary B, and within this movement here we see a nice triangle for intermediate wave B. This wave count now expects downward movement for primary C to reach 1.618, the length of primary A. That's the most common Fibonacci ratio for C waves within an expanded flat. At the hourly chart level, here's the end of B and the start of C, with a couple of overlapping first and second waves within minor wave 1 of intermediate wave 1 of primary wave C. Minute 1 and 2, within 3, minuet 1 and 2. Minuet 2 may find resistance at the upper edge of the base channel and may not move beyond the start of 1 above the short-term invalidation point. If it finds resistance at the upper edge of the base channel, it may end pretty close to the 0.618 Fibonacci ratio of minuet wave 1. There is still an upward trend in place, but the upward trend is very extreme. For gold, it can continue further while conditions remain very extreme. At this high here, this is not a bearish candlestick reversal pattern, but we do have a bearish long upper wick. ADX tells us the upward trend is very extreme. The ADX line is above 45 and above both directional lines. RSI has reached deeply into overbought and then exhibited double bearish divergence as prices made new highs. And so the risk here of a major trend change is very high, but it doesn't mean we can't see some new highs before that happens. As prices moving slightly higher and mostly sideways, volume is slightly supporting upward movement, but it does remain very light. Last week we had a bullish signal from on-balance volume. On-balance volume has now come down to find support at that previous line of resistance. This may assist to halt a fall in price. ATR is declining as price is moving essentially sideways. When gold begins a new trend, it does tend to start off rather slowly. And so that could be the case. We could have had a trend change up here, but we could be about to see new highs first. We need to see price break out of this sideways range before we can have confidence in the next trend. There's a triangle pattern here at the daily chart level. Taking the base of the triangle and adding that width to the breakout point gives us a target of 1849. It's pretty common to see price curve around and do a back test of support or resistance after a breakout from a classic triangle, and it looks like that's what's happening here. It would be normal now to see price move up and away toward that target at 1849. So let's assume the upward trend remains intact until proven otherwise. Proven otherwise would be a new swing low below this point, and then the analysis would have to shift to a more bearish outlook. But for now, let's expect more upward movement as most likely. On balance volume is at resistance. It's not highly technically significant resistance though. This line only has the previous two anchor points, maybe 3 or 4 if we stretch it. This may assist to halt a rise in price. A break above this resistance line would be a weak bullish signal. And for recent days, volume is stronger on these downward days, and we do have at the daily chart level a bearish engulfing candlestick pattern with a long upper wick here, suggesting a trend change. It could just be a trend change to sideways for a short period of time though. Candlestick reversal patterns tell us to expect a trend change from, in this case, upward movement to either the opposite or sideways, and it doesn't make any comment on how long the next trend should last. So that could equally mean a short piece of sideways movement or a full 180-degree reversal. Volume in recent downward days is stronger than upward, suggesting more pressure to the downside. There is a reasonable risk here of a major trend change, but we haven't seen evidence enough yet. ADX is declining at this daily chart time frame. There's no clear trend. ATR declines. There is weakness in upward movement. There is risk here. And stochastics is in neutral territory, and MACD bearish. That's all from me this week with your gold analysis. I hope all our members are having a fantastic weekend.